Yo, welcome to the Long and Short. This is Maestro. Thanks for tuning in. This is the place where you're going to get a different perspective in crypto TA and the market itself. We're breaking things down in a way that I don't think really anyone's breaking it down. And we plan to bring a lot more of this content to the space. So if you like it, go ahead and subscribe to it. Hit the bell notification. Share this information if you think it is valuable. All right, so a couple of things we're going to talk about today. One is the correlation of the COT, Commitment of Traders, to price and how we will be able to call tops and bottoms with it. Okay, everyone says the top and the bottom is hard to call in the market. Not so much. We're going to show you how. Also, you're going to have to allow me to go on a bit of a rant today. I will be talking a little bit of crap today. And the reason why I need to do this is because it's necessary. I think that what we're getting from our trading community, especially when it comes down to actually showing folks how to trade, and there's two sides of the market here. There's investors who say hodl your life away, and then there's traders who are trying to figure out how to do it, and there's no one that's really breaking it down in regards to the crypto market that can show you how to do things without indicators, or tells you to go buy my indicator and that's how you're going to figure out and learn how to trade. Guys, we've already talked about indicators, and we'll dive deeper into why indicators aren't necessarily the best thing, especially for new traders, but not today. We won't dive into that today. I'll go on a bit of a rant near the end of this video though. But before we get into that, okay, let's look at the correlation of the COT. Now, the reason why I look at the COT is very important, guys. I want you to notice something on this chart here, okay? Notice the areas where these lines expand, and then notice what happens in price, okay? And I'm going to explain exactly what all of this means, all right? But for the most part, let's just take it step by step. The green line at the bottom, that's your large speculators. That's your hedge funds. That's your big banks. That's all of your institutions. You know, guys like Elon Musk with millions and billions of dollars, okay? That's who that is. The red lines are the commercials. These are your miners. These are your brokerage houses, right? These are the people who are holding all of the crypto for it to be traded, right? That's your commercial, okay? And then you have small speculators, which are people like us, right? The retail traders, the guys on Bybit, the guys on Femex, the guys on Coinbase, right? Whatever exchanges we're using to tap into crypto, we are the small speculators. Now, what I want you to pay attention to is how the large speculators are always opposed to what we're doing. What you also need to pay attention to is how these commercials will be opposed to the large speculators, okay? But let's take a look at how this actually played out, right? So if we look at price, right? Price was rallying here, okay? And right at the end of September. So, right, 1, 2, 3 weeks. Now, what were we doing during those 3 weeks, right? We were kind of just sitting still, watching the price go up. Didn't really know what to do. But by the last 2 weeks of October, we decided to start taking long positions, right? Now, look at what happens the last 2 weeks of October. Price completely stalls, okay? Even dips a little bit before that final push up. Now, what if we're looking at these things here and we're correlating this, right? Why was there this last push up? If the large speculators are net short, right? Price should just be falling and falling and falling. Why did they do this last push up? Very simply, in order for them to have the steam to push price down, they had to catch all of these stop losses here, right? If people are seeing the price teeter out, what's the next thing that they're thinking? Short, 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 put in the short, put in the short, put in the short. This is actually smart money putting in shorts, and price rallies to take out all of that liquidity here before it makes its move down, right? Sometimes this chart does bug out a little bit, refreshes itself, right? But that's essentially what this point here is before the push down. And you can see it in price, right? So that's why we watch the COT, because the COT is going to tell us, right? Just looking at this information here, okay? They're coming back neutral. They've already served their purpose here. The price is going to fall. We would have been able to call this top for the most part with the knowledge that price does still need to kind of come back and do one more push to take out these areas of liquidity before it falls. Look at every all-time high. Either the second push takes it out or it doesn't, right? But either way, the second push happens. Look at any all-time high on any crypto. You have the all-time high and then a second push right after that. Sometimes a third push. All those pushes are meant to do is grab the liquidity before it falls. All right, so just remember this, guys. This is the way that you trade these all-time highs, okay? Once you see it printed, look for a retracement. The next push up, take the short, not the first one. All right, that's how you typically get wrecked. I can look at this and see price is moving sideways, and no one's really betting on it to go one way or the other, right? Everyone's sort of getting squeezed to the zero line. So you can expect price to continue to consolidate. If I'm expecting price to continue to consolidate, right, what am I anticipating? I can trade within this range, right? So let's bring up our drawings again so that we can show the people, you know, the levels that we're looking at here, right? All this is a range, guys. We're just in a very tight range here. And until the commercials or the large speculators pick a side, right, we're going to be in this range. So if we're in this range, right, the best trades you could take are long positions at the bottom of it, short positions at the top of it, okay, especially if you see liquidity get ran. So the same way that I showed you guys with all-time highs, this happens all over the price chart, okay? Look at this one here, right? We talked about this area of liquidity. We said that price would want to come back here, right? The even highs, the highs here were too even. Price wanted to break through that. And look what it did. It just sent a wick through it, pow, right? This is one day's action. Just sent the wick through it, boom, and pushed the price directly down right after that. Hard push, okay? Let's go to the hourly and see this even tighter perspective, okay? This is what this is. These two highs here, right? Right below this liquidity level, push through it, right? Equal highs here, equal highs here, push through, goodbye, right? This is what we see on the charts all day. What happened here? You had liquidity here, push past it, goodbye, to the upside. You can trade this range all day, right? If you see liquidity get ran, everybody's trading the breakout, right? You're pulling the money the other way. Smart money does this all day to people, right? Because what do most retail traders say? Oh, trade the breakout. If it goes up past 48, I'm taking a long. You're riding. You're taking a ride, actually. That's what's going to happen, right? And I show an example of this, actually. And this is actually going to bring me into my rant. You know what? Let's go into the rant, because we can talk about heat maps and all of that other stuff. But I think before we really start to dive into that on a daily basis, you have to understand what you're seeing here. Most people that come to this market are new. Crypto is full of brand new traders, brand new people who have never invested before, who have never traded before, and they're getting a lot of bad information from people that are said to be credible and quote unquote experts in the market, okay? So not calling anybody out, but oh, someone today said, as soon as price breaks above 48, they're going long. Well, you could play that, but let's look at what happened last time price broke above 48. All right. Now, if you want to base your trade decisions on what other people are doing, that's the easiest way to lose money. It's the easiest way to get wrecked. What I want to show you guys is how to look at this subjectively and say, hey, I got a bunch of equal highs here, right? And I got a bunch of lows here. Price likes to go for liquidity. So what's going to happen? It's going to spike the low and it's going to go up. It's going to spike the highs and it's going to go down. We're trading in a range. There's no real reason for price to break out of this range yet. We're being squeezed, folks. But when you're being squeezed in the market, especially in very tight ranges, all that's happening here is what we like to call accumulation. Okay? Within this range, there's tons of accumulation. And in fact, I think they crashed the price here to accumulate in these zones before they do one thing or the other. Okay? And the reason why I know this is because, look, and this is a beautiful range to play, guys. Think about this. If you took a swing trade from 51 to 46 or 45, are you mad? No. Long or short, right? Even from 48 to 46, 45, you're not mad at that, right? So there's tons of different swings, tons of different scalp opportunities, all within this range here. But what the big guys are doing is they're accumulating here at the bottom of the range, okay? So this is what the price action is showing us. until price action shows us something different, we're not going to believe anything different. All right? Straight like that. So let me go into my rant a little bit, because the reason why I even started this channel, guys, is there's a specific reason. I see a lot of these. And I want to talk about these boxes here for a second, okay? I just want to talk about them. You may use them, and if you're using them for the proper reason, then I don't have a problem. But most people don't. Most people use these boxes. I call them manipulation boxes. In all reality, what they're used to do is actually measure your move on TradingView, right? If I'm thinking that price is going to shoot to this area, you know, and I want to put my stop loss in a certain area, I can get an idea of, you know, what my P&L may be, what my risk to reward ratio may be, just by using this box. But what I see a lot of guys doing is using this box as proof that they've won a trade. I got a problem with that. I have a major problem with that. And the way that they cover it up is they say, oh, well, you know, I don't know any other way to do this. I don't know any other way to explain this to people. Guys, here's the other way. Check this out. It's called paper trading. Okay. And just this morning, as I was making little other cuts for this video, you know what? I took a trade. It was an example, right? That in order for you to really show people how to do things, you need to push the button. People need to see P&L. People need to see account balance go up or down. Okay? I started with 100K. I just took 3 minutes, made $5.20. Not even. I made this in like 20 seconds. Okay? But the reason why I was able to do it is because I pushed a button. I don't see these guys pushing buttons. I don't see these gurus pushing buttons. I see them pulling up these boxes. I see them drawing a ton of trend lines and giving you a ton of different calls, but they never show you something as simple as a paper trade. And anybody can access this, right? Anybody, literally, me, you, anybody can go on to TradingView, get an account, set up paper trading, and practice. This is how I practice. These guys won't even show you their practice, right? Because they don't do this. They pull up these boxes and they make you think that they are some kind of expert trader. Now, I'm not calling anyone out specifically. What I'm really trying to do is say, guys, we need to do better. If this is our community, right? If your family is involved in crypto and you're showing them how to do something and you pull out this box, you know it. You know it if you're a creator. This box is nonsense. You know it because you know you can very easily manipulate this box. Let me show you how easy it is to manipulate this box. Let's just go to some clean price action and find something here. Now, let's just go to the daily chart and let's just go to area price action, right? And this, I'm gonna show you what these guys usually do because it's sick, man. It really is sick. They'll pull up a box. Let's take a long position, all right? And boom, bro. You should have been there. I had the perfect trade. I had the perfect trade, bro. I promise. Once I saw price breaking out this, I put the long on and boom, I made $4,192. This is where my stop loss was. Moment of silence for you. You deserve it, guy. You definitely do. Because this box right here does not translate to this. This matters. This doesn't. It doesn't. And I'm just going to be real. If you see somebody pulling this out, they are finagling you. Ask to see the P&L. Ask a billion times. If they don't show you, they're finagling you. They don't know how to trade. They know how to place this box and talk about what should have happened based on theory, but no execution. We're here to show you execution. Again, I'm going to keep throwing this in your face. I'm just going to keep doing it. Keep throwing this in your face. So you know that this matters. Okay, guys? I don't mean to be an asshole about it, but it matters. If you're learning from someone in this market, that matters. Okay? That matters. And that's why we're showing it. That's why we're putting these levels on and drawing these things out so that you can understand what you're looking at. Not just trend lines and all of this other stuff. We're showing you what we're looking at, right? We're showing you the areas of liquidity that price is trapped between, that it won't break out of. And we're telling you what it has to do before it breaks out. That's where these arrows come from. All right, the short and the long. Actually, go to that example. This is a brand new paper trading account. And the reason why I wanted to bring this up, folks, is because we're going to show you the history. Okay, this doesn't get you anywhere. You want to know what gets you somewhere? Pushing a button. You want to watch me push a button? Check it out. This is how I would analyze price in 5 minutes. Breaking down, breaking down, breaking down, breaking down. Everything's in the consolidation at this point. So if I'm at the bottom of the consolidation point, let's see, flow into the 15-minute, zoom out for a better perspective. Yes, sir. Everything's moving lower. So, in my opinion, price is going to continue to push a little bit lower. Why? Has imbalanced area to clear out here and here. So if I want to take a short, I'm going to take a short by hitting the paper trading button. Okay. Now, I don't want to bet a whole bunch of nothing on this because this is, this is essentially starting off my paper trading account again. And I'm not going to take a major risk. But just to show you guys an example, when you enter in, you're going to see this little red arrow there. Okay. That little red arrow matters if you're a mentor. That little red arrow matters if you're a teacher. It matters. You guys want to say it doesn't? It does. Okay. It matters a lot more than this crap. Okay. Because what you're doing is you're showing people execution points. I'm getting in here at this reason because of that. Right? I gave you guys a 5-minute breakdown. Price is falling, fell into a consolidation. There's areas of liquidity that it needs to clear out at the bottom. I'm going short right there. I pushed the button right there. You see the red arrow right there. Did I use this box? I would never use this box. Okay? I would never use this box. And I'm going to go ahead and take my $5 and 20 profit. Okay? I'm closing my position. This is what you need to do. If you're a trader, if you're showing people on the chart how to do something and you're telling them positions to go in and out at, okay, the least you can do as a mentor for these people, the least you can do as a friend to your community is push a button. So unless you're seeing these, unless you're seeing the play actually be made, just understand you have a better place to go. You have a place to come. Come on home. You got a place to come for us to show you how this really works within these ranges, even as price is going on rallies, guys, and price is falling. We're going to make money in the bear market. We will, because we're going to be taking shorts all day, right? And we're going to make money in the bull market, and we're going to make money in ranges. We're going to make money no matter what price does. That's the goal of this channel. Doesn't matter if it goes up, doesn't matter if it goes down. We will be in the market to capitalize on the dumb money because we play like smart money. We do things like smart money. That's how you become a good trader. And that's what I'm here to kind of help facilitate with the audience and the crypto community as a whole, because there's a gap here. There's a gap here, and I think I can fill some of that gap. And again, I'm not here to down anybody, but guys, come on. We can do better. We can really do better than this box here. All right, we can do better than this box, guys. We really can. All right, moving on. There's one more thing that I want to show you guys that I think is being overlooked, and then we'll go ahead and close out for today. All right, I think most people are aware of, the shiny object theory, right? The shiny object theory means basically that, if I want to divert your attention away from things that actually matter, okay, I'm going to put a shiny object in front of you. Whether it be a diamond or, whatever it is, I'm going to make you look that way. While I do all of the things that you should be doing right now to be in a better position 5 to 10 years from now. All right. Now, here's the thing. I like NFTs. I like meme coins. I think the communities around them are great. I also think that these markets are very overheated. Okay. Just to be real. There's a new NFT coming out every 30 seconds, it seems like. And it's easy to put them on OpenSea. It's easy to flood the market with another 10,000 apes or whatever. Okay. It's easy to do this. What's hard to do, okay, over time, especially when you start to get the influx of all of this flooding of creativity, right? What's going to be harder to do over time is sell those things. If the market is overheated, now's the time to sell your NFTs, honestly, okay? Because if you wait and you hold on to it, you may not see the overheated prices again. You can read about bubbles, tons of different bubbles in markets. And the reason why bubbles typically happen is because the media, the market itself, social media, everything points you in that bubble direction while other things are happening in the background. So as we get more in depth and deeper into this market, we're going to look at the things like NFTs because people like them. We'll look at things like meme coins because people like them. But we'll also look at things like oracles. Now, if you're unaware of what an oracle is, right? If you think of a blockchain, a typical blockchain like Bitcoin cannot pull data into it, right, from exterior sources. And what oracles do is they help to bring that information into the blockchain, right? So the things that matter, things like price tickers, the weather, anything to make your application run, you're going to need links from oracles to do that, right? Because blockchains themselves are essentially ledger databases, immutable ledger databases. They don't change, right? There's not like you can just put data into that and make it work. So you need these other solutions, right? This interoperability, which is what the oracles bring, okay? People don't talk about oracles anymore, right? Chainlink, people don't talk about it anymore, right? Why? Why? Because this is what they're quietly accumulating while they tell you to go buy a ton of NFTs for 55 ETH, right? Complete nonsense, okay? Also, privacy coins, things that people are going to need, right? Things that actually make it possible now for you to transfer wealth privately without the banks, right? Bitcoin now, everything's on a blockchain, so everything can be seen, right? So some of these privacy coins, they're going to have value as you move forward, right? Things like storage. Here's something that I think a lot of people aren't aware of. Everyone talks about the cloud, right? Everything's moving to the cloud. Most cloud platforms, right? AWS, Azure, things of that nature, they're having a hard time integrating with other technologies per se, right? So the problem is basically either those systems are too old and antiquated, right? Or they're essentially trying to build their own clouds and they're not working within the AWS Azure frameworks. And the larger the systems are, the more expensive they are, right? So there's some problems with cloud computing at this point, right? Not everything is able to integrate into it. And so if blockchain is able to come in and kind of sneak in the back door, right? Because if I don't want to pay Amazon more of my money to store everything, now I have other options on databases that are literally immutable, right? So storage of information is very big in blockchain, but people just don't talk about it, right? It's not sexy enough. I don't have a Bored Ape to put on my storage coin, right? Like it's not sexy, so people don't talk about it. But these are the places where if you get into real coins at a good time, this is where you're going to see your 10, 20, 30, 40, 50 X's from, right? Just keep that in mind, guys. All right. Also, energy, right? Just look at all of these different categories here, guys. Just look at them. There's so many different areas that crypto is breaking into that it's starting to take over markets in these areas. So what are we going to do, right? If we know this, what do we need to do next? Well, very simple. We need to do some analysis, okay? What I want to do is take the crypto market cap, figure out how much that taps into the real world industry market cap, right? So for particular industries like healthcare, how much is crypto tapping into that market cap? Healthcare is a billion trillion dollar industry, isn't it? Right? How much is crypto tapped into it? If it's just a small fraction of a percentage, and there's some good projects there, these are worth a look, in my opinion. Right? So we'll take the difference between the two, see how much crypto market cap is tapped into the real world market cap, and then we're going to gauge to see if there's real world interest in crypto actually being in this space, right? Are companies integrating into this, right? Are there working solutions? Is it solving a real world problem? And then I'm going to give it a grade. And from there, we're going to search for the opportunity, right? So this is how we're going to attack sort of the market that's not in front of our face, right? It's not in front of us. These are the things that people are doing in the background. But if we just dive a little bit deeper outside of the hype of memes and NFTs and play to earn and gaming and all of this other stuff, if you dive under the surface, you will find the real gems. Okay? Once you're at the surface already, guys, it's too late. That's the problem with investing. And when new investors come into the market, they don't know this per se, right? They think the thing that's hot and trending right now is the thing that they need to get into right now so that they can make money like the people who were in the trend. Those are the folks who get wrecked every single time, okay? So, once again, we're not going to dive super deep into a lot of this stuff. We will be giving you some more information over time on coins that we find. You know, we'll do some insight on those. But for the most part, if you want to take a look at Bitcoin right now, it is moving sideways. Same thing for most cryptos right now. Everything's up and down within these channel ranges. But again, there is opportunity here. Take longs at the bottom, shorts at the top. All right. And again, stay away from this damn box, guys. Stay away from this box. If you see guys putting this box on the chart, just please, I'm begging you. I'm begging you. Find better. All right. That's all I have for today. This is the long and short. We may be back later on with another video if price starts to move, but we are stuck in this range, guys. And this looks like this is where we're going to sit for pretty much the first week of January. Today is Monday, so I'm not expecting too much price action for Monday. I'm looking more towards the end of the week for things to start to get a little livelier for us. All right, so that's what we're looking at. This is the long and short. Thanks for tuning in. It's your boy Maestro. Please excuse my rant, but you deserve better if you're trading in this market, and that's what we're looking to deliver. All right, we out of here.